Are streaming services really a cable killer? All that and more on this consumer goods edition of Industry Focus. Greetings, fools. Sean O'Reilly here in Fool headquarters in Alexandria, Virginia. It is Tuesday, May 10th, 2016, and joining me on air via Skype is the one and only Dan Klein. How are you, Dan?
I'm good. Happy to be back.
So, you're a New Englander, but you're in Florida?
I am. I'm very lucky to work for Fool or be a contractor for Fool, and that lets me be wherever I want. And honestly, who would want to be in 50-degree Connecticut when I can be in 85-degree West Palm Beach?
Are you on the beach?
I'm not on the beach. I'm actually sitting in our condo, but as soon as we're done, I'm heading to the beach.
All right, well, that's good. Did you hear about the record rainfall we're getting in D.C.? It's like 13 straight days, and it's still going to be cloudy all week.
I think it's fitting given where politics is right now.
It's symbolism, man, symbolism.
The founding fathers are crying.
Yeah, they're weeping. So first topic, we want to talk about if streaming live TV services like Dish's Sling and the PlayStation Vue, are they actually cable killers? What are your thoughts?
Not yet.
Not yet.
This is one of those things where slings seem like a really good idea. There's people cutting the cord. Maybe they still want some live programming. They'll pay $20. They'll get 20 channels with ESPN and TNT and some of the top ones. And it might work, but so far the numbers are pretty dismal. I mean, Dish doesn't break them out, but the estimates are 400 to 600,000 subscribers. That's
a whiff.
Yeah, I mean, in a 95 million household world, that's not that big. And cord cutting itself hasn't been happening at the level everyone predicted. It actually, leveled off last year. So we're in a situation where everyone thinks this is the next big thing, but absolutely nothing has proven that so far.
I was actually surprised at how well, or at least how attractive the offerings are for Sony's PlayStation.
It's a great product. The problem with it is, and I think it's a killer, is that in most markets, you don't get the broadcast networks. Part of that's a rights issue that might eventually be solved. So you've got this product that you've got to figure out how to stream on your TV or through your PlayStation. Easy for young people, but not so easy for, the 40 and 50-year-olds who might spend the money. And then once you do it, you still need some other solution to watch ABC or CBS or whatever it is you happen to watch locally. So it makes it a niche product. The same was true in the early days of satellite.
Got it. So I know I'm reasonably sure that most of our listeners are at the very least familiar with Hulu. Where do they fit into all this? Because it was weird because it seems like all the owners don't have an incentive to make it too good.
They don't. So Hulu has announced it's going to get into the streaming skinny bundle game. The company hasn't really said what that means, but two of its partners, Disney and Fox, are on board. So that makes it an interesting prospect because Disney has a lot of top cable channels. Both companies own networks, but Comcast, the other partner, has basically stayed in the sidelines and said, we're not sure we want to cannibalize our business with this. So
and it's so funny that all of them own it too. It's just
Can you imagine those meetings? Like it's basically a bunch of enemies getting in a room and trying to get along.
Well, not only that, but they're like debating on how to take advantage of America's desire to stream things and not kill their bread and butter networks. I mean, it's a fascinating case study.
They're in a tough position. You have to embrace the future, but you also don't want to hasten it. You're making a lot of money in traditional cable, and you only lost, as an industry, less than 400,000 subscribers last year. And the fourth quarter had growth, and the first quarter has actually had a little bit of growth. So why would you make it that good? But you don't want Dish to steal it all. So it becomes very complicated.
So talk to me about pricing, because as we've seen with Netflix, people are more than happy to fork over $10 a month if the value's there, and I'm pretty sure Hulu costs, $8, $9, $10. They haven't announced pricing for their streaming bundle though, correct?
Yeah, they haven't, and basically Sling is $20 for the base package, which is roughly 20 channels. And Sony is about $40 for 55, 60 channels. And Sony's sort of a true cable alternative for people who would just rather stream. It's a little cheaper, but it's not dramatically cheaper. And honestly, you might make up the difference in what you're saving by having to pay more for broadband, losing the bundling discounts. Hulu will probably come in somewhere in the middle, and the reality is, I don't think anyone's figured out the model yet. Dish had this idea that millennials wouldn't want broadcast networks, but they'd want, Comedy Central and Adult Swim and things like that. And it just haven't hasn't proven to be true. If maybe, a true a la carte service would work where people could just handpick a couple of channels to go along with Netflix and
Amazon
Hulu.
Prime, excuse me.
Sorry, I have all of them. So I'm overpaying for cable and for streaming services, but until it's seamless, where you only have to go to one service for everything and you can really get what you want, I think this stays a niche offering.
Yeah, I'm very curious, and the reason I sneezed Amazon Prime there was because they're trying to do something like that. Because you can get, for example, Stars through Amazon Prime, and you pay Amazon the $10, and they send most of it over to Stars.
And Dish,
Um,
Dish does the same thing with Sling.
yeah, so I don't know. It's
But you still can't get, I've written all these articles on how to get around having cable, and it involves having an HDMI antenna, subscriptions to three different services. It just doesn't work. If you have Netflix but want a lot of network shows, you need Hulu, and you have to switch interfaces to do that. And it just becomes, we're used to flipping a channel, flipping the remote control, and everything is there, and neither one of these products delivers that.
so everybody's expecting cable to die or something. They just don't know how or when. What's an investor to do?
I don't expect cable to die. I think we're probably moving into a world where cable digitally streams and maybe the lucrative set-top box revenue will ultimately go away. But I still think because you're tied to broadband, that Comcast and the other big cable companies are going to find a way to tie in their television. So they're going to lose revenue on the television side. We're going to see some of the little channels go away. We're going to see, definite change in that space. But I haven't seen a disruptor where just because I have Netflix, once you have kids and a full family in a house, where even the millennials aren't going to say, boy, I really need 50 channels because my wife watches this and my kids watch all the Disney channels and my teenager watches all the MTV channels. I think cable isn't the record business. I think it's going to evolve into something that makes sense. And, it's just kind of investors strap your boots on for a while.
Yeah, I could not agree with you more. In fact, I said as much, particularly your point about how they'll just charge us more for internet. I wrote an article on April 23rd. It got published on Fool.com, and I just wrote why rumors of cable's death are greatly exaggerated. And bottom line, I mean, if you look at the prices for just internet packages from these guys, and it's just going to get worse when we need more and more bandwidth.
And there's potential disruptors to it. If Google figures out how to put a blimp in the sky that brings, the entire
Internet
country.
drones.
Yeah, if something really changes, then maybe. But the reality is, a lot of the cable companies are also the people that own the content. So Comcast is going to find a way to deliver its channels, and that might mean partnerships, but it's also going to mean slowly being at least at pace with the curve in terms of skinny bundles and a la carte services. And, there's going to be shakeup, but there's not going to be disaster.
Awesome. So if it's okay with you, we'll pivot over from streaming services and making money off of the quote unquote death of cable over to donuts. Go ahead.
I'm keeping the coffee industry alive,
Yes,
pretty much
you
on
are.
my own. So
You New Englanders and your Dunkin' Donuts. JAB Holdings, which just closed a deal to buy Keurig Green Mountain, is buying Krispy Kreme. I'm not surprised because I know their evil scheme, but what do you think?
it's an interesting strategy. I mean, basically, you've got on the retail front, two major players. You've got Starbucks and Dunkin' Donuts, one with something like 22,000 stores, the other with 11 to 13. I forget the exact number. And at least in terms of being a retail competitor, what JAB Holdings is doing is they're buying every single coffee chain that's available. They bought Pete's, they bought Intelligista, they've picked up all sorts of little local chains. And now with Krispy Kreme, they have a brand that's sort of pull. They also own the parent company of Einstein Brothers Bagels. So you can start to see a strategy emerge where, maybe Pete's would be an upscale product in a Krispy Kreme. Maybe Krispy Kreme will become the coffee brand at Einstein, but it's still just a collecting asset strategy that hasn't really congealed.
Yeah, they clearly want this just portfolio of coffee and donut chains. It actually makes me wonder how long until they buy the local mom and pop coffee shop here in Alexandria. They're a private company. Correct me if I'm wrong. They're based in Europe, right? I think it's
That
like a
they are
family.
based
Yeah.
in Europe, and I mean, they even own one of the leading makers of Nespresso pods, which is the dominant single serve brand in Europe. So
Oh boy.
they're all over the map in terms of what they own. And I really do think so far that it is an acquisition strategy, and then eventually they'll figure out how to put it all together. Because most of these brands they're buying, Kerrigan and Krispy Kreme specifically, are still being run as independent companies by their old management. So they aren't even buying things and consolidating them, and they've turned some Caribou coffees into Pete's, as you mentioned to me earlier, but they haven't made any wholesale changes so far.
So you're so are you speculating when you say that the goal is to create synergy? Because they clearly haven't done that just yet.
They haven't done it. You know, I don't know. It seems very odd. If you own Keurig, obviously it keeps the money more in the family when you make a deal with Krispy Kreme for K cups, which is actually the coffee I had this morning. But
Nice little
that's
plug.
that's efficiency. If they don't start sort of pushing the brands on each other, then they're just giving up an opportunity, and it doesn't make a lot of sense.
Yeah. So, bottom line for Starbucks shareholders and Dunkin' shareholders, should we be nervous at all?
I don't think so. I mean, with Starbucks, there's some exposure in the fact that they have a K-cup partnership, but because of the rights issues, where really any company can make K-cups, and we've all seen it's pretty easy
Yeah,
to
it
get around
is.
Keurig
You can
2.0
make your own.
security. Right. So, for Starbucks, I'd be scratching my head a little bit. Like they do appear to be putting a competitor together, and maybe in the supermarket end of the business, Starbucks and Dunkin' should worry about this company that now has sort of all this combined clout. But it doesn't seem like a competitor, for the go out to a cafe market, and Keurig was already dominant in the home market.
Got it. Okay. Well, Dan, thanks for joining me on air, and thank you especially for your thoughts. Enjoy the beach, get some rays.
Thanks for having me.
You bet. And if you're a loyal listener and have questions or comments, we would love to hear from you. Just email us at industryfocus@fool.com. Once again, that is industryfocus@fool.com. And as always, people in this program may have interests in the stocks that they talk about, and the Motley Fool may have formal recommendations for or against those stocks. So don't buy or sell anything based solely on what you hear on this program. For Dan Klein, I am Sean O'Reilly. Thanks for listening, and Fool on.